to buy a stock. Options is just a level up. Well, it's a super level up, actually. And if you're interested in it, if you've been curious about what the heck is options, or when I showed a Millionaire Challenge trade of the day, and you're like, how are these cats making, a 200 or 300% return in an hour? Like, how are they doing this? Most people are doing it in the options market. So, you don't necessarily have to play in that market, but I always try to teach people how to do it. Teach you how to do it. You might have a friend or a family member that's trying to get into this business and they don't have any real guidance. They're taking classes, they're going to academies, and they're not really learning how to trade. They're learning what different things are, right? They're learning the technicals, they're learning how to use certain platforms. But the art of trading, guys, the art of trading. Hey, thank you for the hat, Safari Don. The art of trading has just gone away, in my opinion. So many people are so focused on teaching, like myself. I'm teaching also, right? So many people are interested in this part of the game, and they're not really showing you how to trade, how to invest, how to actually get into the market. What are they buying? Like I'm a pure trader and investor from the heart. That's where I started. And I became a consultant and an educator after I became successful. I didn't do the opposite. I didn't say, let me do classes, let me get money, and then, one day I'll be a great investor, or try to do it all at the same time. I didn't even want to teach. I really didn't. I was just all about my trading and investing. I was here to make money. I've always been a coach when it came to athletics. I was an athlete. I coached my kids until they were state champions in whatever freaking sport they decided that they wanted to get into. I was a realtor. So I kind of coached people into building their wealth through the real estate market. But I had no intentions on teaching individuals the stock market. That just wasn't my focus. But as I started to trade and invest and interact with different people, I started to realize, man, people are actually, they know the It's kind of like this. This is how I always explain it. Let's say you never swam before, and you go to the bookstore, and you go to the bookstore and you see a book that says how to swim, and you've never been in the water ever, right? And you have somebody there that wrote the book, and let's say the person that wrote the book never swam, right? But they heard about the techniques of swimming. They told you how to move through the water. They tell you how to kick through the water, different exercises you can use to be a great swimmer. But they never swam, right? Can they really coach you into how to psychologically and mentally get through swimming? That's how I feel. I feel like the majority of the education that's out there, we don't actually have people that are actually trading and investing in the market. And it sucks because we learn about techniques. We can go and read a book about chart patterns. You can learn 100 patterns in the market. A head and shoulders, a triple bottom, a double bottom, right? A flag pattern, a pennant, right? You can learn all of those patterns, but then when it comes to using it, who do I talk to? Like who knows? Because I can have that information, but what happens when you jump in the water and then all of a sudden you panic and you're like, oh my God, they didn't teach this in the book. They didn't teach you what to do once you got into the water. They didn't say, how do you react when the water goes up your nose? They didn't tell you how you were going to actually feel like you're drowning when you're underwater, right? They didn't tell you that you actually are not going to be able to see when you open your eyes when you're underwater. So how am I going to deal with that? My body doesn't know anything about it, right? There's so much to trading and investing that you're not going to learn in an academy or a book. So that's why you guys got to come here. You have to come here and we talk about the market through the eyes of a trader and an investor. But at the same time, your job is to be pulling this stuff up also. Now, I know a lot of you guys are looking and watching me do it on my screen first, right? I get that. And you're trying to learn the techniques. You're trying to see what I'm looking at. You're trying to write down a couple of notes. I get that, right? I get it. But at the same time, are you actually leaving here with something? Do you actually have a goal, right? So, that's why I got into this last day with realistic expectations. A lot of people come into this game with unrealistic expectations. They have unrealistic expectations when it comes to what they want to get out of the market. So for the last 100 days, I've been trying to coach you guys into getting into like don't so much think about the technicals so much. Right? I show you guys technicals, but what have we been talking about the whole time? Trending, right? Trending, when to get in and when to get out. Realistically, how much are these things going to fall? Because I'm a real trader. And what I've seen a lot of people do when they come into the market is they focus too much on the exact numbers, and they got this has to be this and this has to be that. And if you don't get in at this particular time and it's perfect, then you're not going to the market's not like that. The market is not about perfection. The market is actually using that to their advantage. See, if they know that you guys are setting stops at support levels and resistance levels, they can pretty much go out there and take your money anytime they want to. You gotta be a little bit flexible with the market. And to do that, you gotta be in it. You gotta understand it. You gotta laugh when you see certain things, and you guys gotta learn how to lose. There are times when you're just gonna lose because the market is like, I'm gonna make everybody lose today. I don't care how technically sound they are. I don't care how fundamentally sound they are. And when I take their money, it's gonna take them 2, 3, maybe even 2 or 3 months to figure out that there was no way to get out of that loss. See, true traders know that. If I lose on when I lose on a trade, I laugh and I say, all right, market, you got me, but you're not going to get me 2 or 3 times in a row because I'm going to consistently hit you with the same move. Nothing is 100%. You're not going to be able to find the answer by putting more information on your charts. You're not going to. Thank you for the heart me. Less is more. Less has always been more. That's why when I teach 5th graders, my 5th graders understand the market way better than my adults. Just like my 5th graders that have never swam before and my adults that have never swam before, the 5th graders are going to pick it up way faster. Now, babies are going to pick it up even faster than the 5th graders because the more afraid you are, the more accurate you have to be. That is what your Achilles heel is. It's your Achilles heel, your fear of losing. You got to take that fear, guys, and bottle it up in some way. And the way that you can get through this is by doing all 3 things. If you're investing, if you're swing trading, and if you're day trading, I promise you, you're going to make better decisions. If you're strictly day trading, and you have all your eggs in one basket just day trading, in my opinion, because you don't see what's going on through the swing trades and the investments, you're going to make some bad decisions, in my opinion. I want you guys to come into the game understanding everyone. Thank you for the hat. Understanding trends, time frames, and realistic expectations. I argue with traders all the time, and it's always I told you, it's always my youngsters. It's never my adults. What I argue with my older adults is how much beta you should have when you're buying companies. Like my older my older, clients that come to me, they're scared of buying Apple, Microsoft, and Google. All right. They're just afraid of them. And I'm like, I don't know why. They're afraid of it going down 10, 20%. I'm going to tell you why, because they're sitting on 5, 6, 7 figures. So a stock going down 10% or 15% is huge when you got $1 million in something. That's $150,000 you could be down in something. I understand it. You don't want to lose it. You've been working for this money this whole time. I just don't want to lose it. My youngsters, what I love about you guys is you're going to pull the trigger. You're going to buy this crypto, that crypto. But then you guys are unrealistic. When I tell you guys, these things are going to drop 50%. You don't want to believe it. You don't want to believe that you can lose. Oh no, you just an OG. I'm coming into this game and I'm gonna kill it. Word? Talk to me in about 6 months with that strategy that you're using. They're gonna win fast, but the quicker you understand that you're gonna lose in some way, the faster you're going to be able to get to those thousands or millions that you're searching for. But my youngsters, you got to start investing in yourself. You're the ones that we're looking at where we're like, man, if I just put $1,000 in that stock when I was your age, I wouldn't be on this platform right now. You got to listen to the OGs. You're going to hear just about every single one of us say, if I only knew what I know now, I would have put more money in the market then. I've never heard anyone say the latter, ever. Because the market is sitting at its all-time highs right now. That means any money that was invested in the market anytime in history, you would be up right now. And I want you to think about that psychologically. Any day, any month, any year, if you had invested in the market, you're going to be profiting something. Now, if you bought in the last week, maybe not. Anytime before that, anybody that had bought the S&P, 100% of the people that bought the S&P, if they're still in it today, would be profiting. That should say a lot to you. You know what we've been through in the last 150 years? Thank you for the hat. Why are you afraid of something? I can see if you're afraid of something. If we looked up at the market and the market was down 90%, if the S&P was down 90%, if Apple was down 90%, and everybody lost 80% of their wealth, I can see you saying, man, I don't know if I want to get into this market right now. Because you see everything down. Like I can understand why people thought the way that they thought back in 08, 09. 08, 09 is the only time I could really say to myself, I understand why you're not investing in the market. It felt like we were never coming back. Everybody's wealth got wiped away because most of Americans' wealth was tied up in their real estate. And I saw real estate go down 80 to 90%. It was one of the worst things I think I've ever seen in my life. But I'm happy that I was able to see it because I truly saw how rich people make money fast. They wipe out everything. They wipe out hands that are weak. And if you have cash, you come in and you buy up everything. In Atlanta, they had this project that they called the Beltline when I first started doing real estate, 2003, 2004. Every single one of us that were, we just got our real estate license. We were college. We had our degrees, we had a little bit of money, we all had decent credit. We were buying up all the property in the Beltline areas. We were buying in all the areas. We were buying what the millionaires and everybody else was buying also. We were buying all the way up from 2003 all the way up to 2008. Most of us was sitting on multiple properties. 5, 6, 10, like all of my friends. We all had 8, 9, 10 properties. Chilling. Like, man, you can't tell us nothing. We've been winning our whole lives. We winning right now. And then the real estate market crashed and wiped out all the real estate across the world, including the house that you were living in. The home that I was living in went down. I mean, that I was raised in. Property went down 75%. If you couldn't hold on to that real estate, it was gone. And you know who snatched it up? Anyone that was liquid, that was able to buy real estate. And they just laughed. They was like, yeah, y'all keep buying in all of these different areas. We gonna come snatch all that property up, and then the government's gonna come in. The government's gonna come in, slap the hands of the banks, wipe out all of the smaller banks, and now those companies are bigger. And then they wipe their debt clean too. Oh, all of those foreclosures that you guys have, we're gonna wipe it clean. It's not your fault. The market is rigged to go up. I realized then, I was like, oh, I now finally understand the game. The market is rigged to go up. We think in dollars like all the time. We think in dollars. We think in monetary. We think 1 + 1. We think that the amount of money that's circulating today was the same amount of money that was circulating 100 years ago. No, it's not. All the government has to do is go hit enter and print money if they want to. That's why I laugh when you guys are like, the debt that America owes is whatever trillion or whatever amount of money. The government don't give a dang about that debt. Y'all give a damn about that debt. The government's like, oh, we'll just print it and make it go away, or we'll just make it keep going higher and higher and higher until it's a quadrillion dollars. And what's after a quadrillion? A quintillion? We'll just wait until it's a quintillion dollars. I won't be around then. Y'all are still caring about it. But what I'm noticing is, oh, that quadrillion dollars that's being printed is going into the stock market. It's rigged to go up. It's rigged to go up. It took Apple 25 years to be worth $1 trillion in market cap. It took 20 years for it to be worth $1 trillion in market cap. And then the following year, it was worth $2 trillion. It took 20 years for Apple to get to $1 trillion in market cap. And then the following year, it was worth double. What happened in that 1 year? Nothing. Money was printed. That's what happened. And that money flowed into these companies that you guys are afraid to buy. Thank you for the hat. And still afraid to buy it. Don't understand it. Don't realize that in 10 or 15 years, you could see it with your own eyes. I remember when we went to the dealership to buy a Honda Accord. We couldn't afford it. I remember brand spanking new. It was $9,989. And my mother was like, let's go back to the Nissan dealership. And we ended up getting a vehicle there because the $9,900 for that brand new Honda Accord was just too high. And now a brand new Honda Accord is like $50,000 or $60,000. What the heck changed? Oh, Joel, the engine just got faster. And, you know, they put a couple of things in it that made it more luxurious. They didn't put $50,000 extra equipment in that vehicle for it to be worth $50,000. It cost $50,000 because that's on, you know, that's a gimme. Because if you don't want that for $50,000, you're gonna have to pay $80,000 or $90,000 for a Caddy or $130,000 for a Denali. I never thought that there was going to be the day that I would see $130,000 pickup truck. Now pickup trucks are the new limousines on the road. It's called inflation. Things are going up in price slowly. You're just not seeing it. The people that don't own things, they're seeing it. That's why America's crying right now. Because if you're not invested in real estate, if you're not invested in stocks, if you don't own art, if you don't own a Birkin bag or Rolexes or gold or silver or a business that can inflate during these periods, you are feeling it right now. Us homeowners and stock owners and, real estate owners and art owners, we feel it. We don't feel it like you guys do, but we feel it. But because we're invested in these particular things and our portfolio is growing, we're growing with the inflation. If you're not invested in these things that are going up in value, you're going to get left behind. We don't have realistic expectations when it comes to investing. The stock market is the building blocks of business. I don't know how many times I have to tell that to people. Before you even buy a business, I think there should be a class on stock ownership. That's why we should start these kids out when they're in fifth grade, buying things. They're learning how to buy something and it appreciates in value. And if this sector starts to grow in value and the market cap starts to grow on that company, they get to watch it grow in value. They can watch the Jordans that they buy go down in value, and they can watch the stocks they own go up in value. They're watching the crypto go up in value. You can shit on crypto all you want. These youngsters are actually learning the building blocks of business. And some of you guys are stopping them from doing it because of your opinion of crypto. Let them go out there and practice buying something and seeing how much it goes up or down. And stop listening to Cousin Al tell you it's use case. Don't nobody care about a use case. What's your use case of buying a block of gold? I bought a GLD. What's my use case of the GLD? What's my use case of when I buy Apple? What's my use case of that? To make money. Stop using these excuses to not buy things. Y'all sound ridiculous. All right. I don't want to preach, but I have to preach because these are the things, these are the obstacles that most of you guys are coming up. These are the obstacles that you're trying to get over. These are the objections that you hear from your peer group that's stopping you from investing in yourself. You got to have realistic expectations also. Anybody out here buying Dogecoin right now? Somebody look it up for me in the comment section. Somebody tell me, what is the market cap of Dogecoin? I always say Dogecoin because it's the one that everybody was buying because they thought it was cheap. Oh, Joel, one day it's probably going to go to $1,000. I own 1,000 shares. If it goes to $1,000, it'll be worth $1,000. And I'm like, that's not how the stock market works. The stock market doesn't work where you've seen a stock go to 1,000. So because Dogecoin is $1, it's going to go to 1,000 because every other stock went to 1,000. That's not how it works. Dogecoin is worth $17 billion. And that's how much it costs? 10 cents. It costs 10 cents a coin. So what's realistic expectations on Dogecoin? Dogecoin has a $17 billion market cap. It costs 10 cents. So, in order for that 10 cents to be worth $1, that means Dogecoin has to grow 10 times its value. Dogecoin right now is 17 billion in size. In order for your 10 cents to be worth $1, you need $87 billion to be invested in Dogecoin. Not million, billion. No. We're not talking about supply. See, that's where a lot of you guys go wrong. Don't matter about supply. Supply and demand, I get that. It's not what makes things go up and down. Not in the investing world in the beginning. That's how they fool you. They use these words and these terms to tell you, guys, the supply of these cryptocurrencies are no different than the supply of shares that are out there in the stock world. Okay? Yes, I get that they cut the supply in half. I get that. Even with Bitcoin, they do a halving every 4 years. I get that. It still does not mean that that's actual funds that is giving you that market cap. I don't care if the supply was 10 coins. If a billionaire is not willing to pay $1 billion, it can go to 10 coins. Dogecoin can only have 10 coins that are out there, and each one is worth $1 billion. But if nobody uses Dogecoin, don't nobody care. You'll have one dude that owns all the Dogecoin on the planet, and it won't matter because they're like, everybody else isn't making money. You own all of it. So supply sometimes can go against you. But what matters is how much money you need to be invested in Dogecoin in order for your coin to go up. It's real dollar amounts. A lot of you guys think it's supply. It's not. It's real money. Yes, the supply increases the demand. I get that. Think about gold and silver right now. Think about gold and silver. Why is gold going up in price? Gold is going up in price because they said that the supply is decreasing. But you can't just say, all right, gold costs $5,000 an ounce. You just can't say, all right, guys, today's price is going to be $30,000 just because a person's willing to pay it. It still grows in market cap. So, for example, if Dogecoin is $17 billion in size and you want to make 10 times your money, you need Dogecoin to go from 17 billion to 170 billion. Think about that. 17 billion to 170 billion. That means I need $53 billion to be invested in Dogecoin in order for my 10 cents to go to $1. That's a lot of money. But they don't tell you that. They tell you the supply. The supply is getting cut. It's only going to be a couple for us to have. And then you guys just keep buying it. They know the words to use to fool you guys, to make it an illusion. They never said, oh, the asset's already worth 17 billion. In order for you to make 10 times your money, we need this. It's simple math. 1 billion to 10 billion is 10 times your money. 17 billion to 170 billion is 10 times your money. 170 billion to 1.7 trillion is 10 times your money. So where do you make your money? You make your money, guys, when it's 1 billion in size and it grows to 70 billion or 17. You make 17 times your money. It's harder to make 17 times your money when it's already 17 billion in size. And most of you guys don't know this yet. Did y'all hear what I just said? Some of you guys still ain't get it yet. I'm going to say it one more time. When Dogecoin was 1 billion in size, you had realistic expectations says that you're more likely for this coin to go from 1 billion in size to 17 billion. That's 17 times your money. Anyone thinking that Dogecoin is about to grow 17 times its value from where it is right now, you have unrealistic expectations because you never did the math. What's 17 times 17? Let me do that in my calculator. In order for you to make 17 times your money, I don't even know if my calculator can produce a number that high. In order for me to make 17 times my money, I can't even put these zeros here. It's already 17 billion. Y'all tell me what number is that? What? 17 trillion? What's the number? Nah, because 10 would be like 170. It'd be like 300 billion or something in size. From where it is now, that means it's going to overtake Ethereum, which is the second largest crypto in the world. That is not being realistic. That's not understanding math. And a lot of you guys are buying things not understanding the math behind it. You have unrealistic expectations, especially you guys that are buying Shiba Inu. Ooh, I'm going to buy Shiba Inu because it's 0.0001 a coin. Yeah, but can somebody tell us what is the market cap of Shiba Inu? I think it's like 5 billion or 7 billion in size. Thank you, Focus. Dogecoin would have to grow to $289 billion in order for you to make 17 times your money. It's unrealistic. But a lot of you guys are sitting there and holding it, waiting for you to make that Bitcoin type run that probably ain't gonna happen for the next 20 years. So Shiba Inu has a $4 billion market cap. Can somebody tell us what the market cap of XRP? What is the market cap of Ripple? A lot of you guys don't know this. How big is Ripple, guys? Somebody check what is the market cap of XRP, which is Ripple. 19 billion? Is that right? Can y'all double check that? Y'all sure? I thought Ripple was bigger than that. Who in here knew that Ripple was already 100 billion in size? None of y'all. 100 billion? But Joel, it's like $2 a coin. They tricked ya. It's an illusion. XRP is 100 billion in size. That means, let's do the math. If I got $1,000 invested in Ripple, in order for that 1,000 to be worth 10,000, Ripple has to go from 100 billion to 1 trillion. There ain't no $1 trillion assets except for Bitcoin. Bitcoin's worth like 1.5 trillion. You're telling me Ripple might do it? Ripple might one day. I hear the arguments. Joel, Asia, Household Bank, they're all using it for international transfer. I get it. If all the banks just put in 100 million, we can get it to a couple of $1 trillion in size. I get it. Are they doing it? No. Why would they do that when they can go buy gold and silver? Which is why gold and silver is going through the roof. Which is why you guys shouldn't have all your eggs in one basket. I own a full Bitcoin. I also own silver. I also own gold. I'm diversified because I don't know what's going to run. But I know if gold right now has a $40 trillion market cap, in order for my, whatever amount of gold that I have invested in gold, in order for it to make 10 times this money, gold would have to go to 400 trillion. So anybody thinking that their gold is going to grow 10 times from here, unrealistic expectations. Silver had room to grow because its market cap was small. Gold's market cap, however, is like in the 50 trillion range. But you think it's going to be 500 trillion? Where's this 500 trillion going to come from? 500 trillion? That's the only way you're going to make 10 times your money in gold for those that are buying it. So if you're buying gold, I don't want you to buy gold, guys, because you're expecting to get rich off of it. Realistic expectations say, if I look at the history of gold, it's been going up with the S&P 500. As much as we're buying gold today because it's doing its thing, it wasn't doing its thing last year. The S&P was doing its thing last year. Now this year is gold. Maybe next year is Bitcoin again. They rotate. But what I see a lot of you guys do is you guys have no idea how much the assets, the things that you guys are buying. Stop looking at the stock price. Stop listening to supply and demand stories. Look at the market cap. Look and see how it's been producing year after year. And can it continue to grow? I do believe Bitcoin can reach a $20 trillion market cap. I do. Think about it. If Bitcoin right now, this is realistic expectations. Realistic expectations. I'm not thinking about supply, demand. I'm not thinking about the halving every 4 years. I don't care about none of that crap. I really don't. It's good to get people to buy. But the only number I'm thinking about is the 2 trillion that Bitcoin is at 100 grand. Bitcoin at 100 grand is 2 trillion in size. Can somebody in the comment section tell me what does the market cap of Bitcoin have to be in order for my $100,000 coin to be worth $1 million? Someone tell me. Someone tell me in the comment section. If Bitcoin right now at 100 grand has a $2 trillion market cap, what does the market cap have to be in order for my 100,000 to be worth $1 million? 20 trillion is just math. It's just math, people. It's just math. That is a real number that real assets have to be invested in that particular thing in order for it to be valued at the price that it is. And a lot of you guys didn't know this, especially Uncle Al that was like, Bitcoin is worthless. No, it's not. Bitcoin is worth 2 trillion. Where did the 2 trillion come from? It didn't just come out of somebody's ass. It was $2 trillion invested in Bitcoin. When I bought Bitcoin in 2018-19 for 5,000, you guys were listening to all the other stuff that didn't matter. The only thing that mattered to me was that at the time, I didn't realize there was $100 billion in Bitcoin. When I bought it for 5,000 a coin, Bitcoin was 100 billion in size. So I told everyone 3 years before it happened, I said, when Bitcoin hits $1 trillion market cap, it's gonna sit there for a while. It doesn't matter what the supply and demand and all that is. It's gonna sit there because humans buy crypto. And that's a psychological area. And I said, when it gets to $1 trillion, my asset's gonna go from 5,000 to 50. I'm going to sell it. We're probably going to go through a crypto winter. And then when it comes back to 50, I'm going to buy it back. So I sold it for 50 in 2021, I think. Yeah, 2021. Everybody called me crazy. I said, Bitcoin drops 50% every year. I knew we were going to get to that $1 trillion market cap. Let me sell it when it drops 70% because Bitcoin's been dropping 50 to 60% every year since it opened. I'm going to buy it back at a lower price. Nah, it dropped to 18. I didn't buy it back. It got back to 50. I got back in. So now people are like, how long are you going to stay in it? Well, if I own $100,000 worth of Bitcoin, which I think is 80,000 today, and it gets to a $20 trillion market cap, my Bitcoin's going to be worth $1 million. Now, realistically, guys, can we get to 20 trillion? This is the $1 million question. I don't care what the supply is. Is there enough money on the earth to support a $20 trillion market cap? That's the only question anybody should be asking themselves. Is there enough dollars on this planet to be invested in this so that it can be worth $1 million coin? The only way that you can answer that is you can say, is there any other asset out there that's worth 20 trillion? Yes. Gold is worth 50 trillion. Ooh. And if this is going to be digital gold, you now have something that can support the market cap of Bitcoin. Most of you guys don't know this, or even knew it, or even looked at it, or even understood it, because you've been looking at the wrong thing your whole lives. If you're buying NVIDIA today, can somebody in the comment section tell everyone what is NVIDIA's market cap? Somebody in the comment section, please tell me what is the market cap of NVIDIA? Because y'all are going to say, it's $100 a share. It's cheap. It's cheap right now. It's cheap, Joel. It's cheap. It's $100. No, it's not. It's $4.6 trillion. They fooled you. You've been bamboozled. Because you don't know what to look for. You do now. That's why you're here. We're now going to start going into this game with realistic expectations. Hold up, Joel. Hold up, Joel. NVIDIA is $4.6 trillion in size? Yes. Well, I got $1,000 invested in it. Great. In order for your 1,000 to be worth 10,000, NVIDIA has to be worth 40 trillion. The same amount of gold that's on this planet. Is that realistic, people? Is that really realistic? But Joel, they got these data centers and AI and you're looking for the answer, and the answer is looking right dead in your cornea telling you that is unrealistic. For you to think that NVIDIA is going to $46 trillion so that your 1,000 can be worth 10. Invest in something else. Now, does it mean that you can't make 10 or 15 or 20%? Or when NVIDIA drops 50%, you can make a 50% return? Or you can go into the options market and make 1,000%? Yeah, that's realistic. But buying NVIDIA now because Joel got a 3,000% return because he's been holding it since 2020 does not necessarily mean you about to get a 3,400% return. You missed out on the move. Joel didn't. Joel got in when he understood what market cap meant. Oh, it's a small company. It's got a small market cap. It's got a $20 billion market cap. So when it grows to 2 trillion, you make 100 times your money. That's how people make 100 times their money. Not because a person's willing to pay $1,000 for NVIDIA and now the stock is $100 because you willing to pay 1,000 tomorrow. Like that's not how this shit works. Somebody said in 50 years it might. Realistic expectations. Y'all don't have it. Realistic expectations. And then when I break it down for you, you get angry at me. Don't get angry at the bearer of, I'm not trying to be the bearer of bad news. Please don't kill the messenger. This is how it works. You guys are not looking at the right thing. I don't care about stock price. I don't care about supply and demand. I don't care about none of that crap. What I care about is, are people buying it? And if people are buying it, can it go to this level that everybody thinks that it can go to? That's the only thing I care about. I love the information. Don't get me wrong. I love information. But where you guys go wrong, realistic expectations, is you guys will buy things off of information. You guys buy off of information. I use that information and wait until I see people buying. We all know one day the cannabis market is going to explode. We don't know if it's this year. We don't know if it's next year. I don't care about what laws they're putting into place right now. Do you see, is Curaleaf worth 20 billion a day? No. Is any of the cannabis companies worth even 10 billion today? No. But guess what? They small. When they do finally run, it's gonna make a lot of money. Why? Because they're small market cap companies right now. They're all worth less than 10 billion. That means if they run to 50 or 100 billion, there's room to run. But Joel, they're putting up Curaleaf shops. I went in Florida and I saw one on every corner. So what? That's the operations of the company. That's not where you make your money. You make your money on the investing side. I want them to continue to do that. You know who also is building a bunch of restaurants, Shake Shacks and Wingstops. Just because they're building, guys, doesn't mean the stock price is going to reflect it right now. But you're going to see it when it starts to go up. So just wait. Have realistic expectations. Realistic expectation says, I have this great information. But that doesn't necessarily mean that information plus company equals this stock price on this day. You guys think that because you're so... Stop doing that. Information plus chart plus people buying says that it can possibly go to this value if the value is realistic. And then you can say, oh, they're earning this amount of money. So if the company's growing at 20 or 30%, you know, you guys that look at the PE ratios and the cash on hand and the stuff that don't matter. I don't get into all of that.
Now connected to MacBook Pro 2.
And I laugh because I used to do the same thing. I used to do the same thing you guys are doing right now. I would come in with a certain amount of money and I would say, ooh, people are willing to pay up to $1,000 for stocks like Netflix's. And at the time it was Amazon's and Google's. So I'm going to stay away from those companies. And I'm going to buy all of these cheap companies that are $3 and $4 because I can buy more shares. And because I can buy more shares, when people start coming in because, the supply is less and the demand is high, I'm going to make a whole bunch of money. Wrong. Don't matter. It's all like tech talk. It's all stock market talk to people that don't understand market cap. I've heard it all. Market cap, number one. Market cap, number one. Where can it go to? In the real estate world, we have these things that we call comps. A comp is what we call a comparable. What is a comparable? Let's say I had a condo in Atlanta, but I have a friend that has a condo in Manhattan. And let's say you built that condo in Atlanta and you built that condo in Manhattan, right? And let's say you built, let's say you did the same materials. It's a 2,000 square foot, 2-bedroom condo. The cost to make it is the exact same. You can have the highest demand ever in Atlanta. So many people want this. They're going to take the price up. There's going to be 15, 20 offers on that particular condo. The demand is extremely high, but because the comparables to other condos in the city is only 300 grand, you might not be able to sell that condo but for 350 with everybody in the city wanting it. You can have no demand in New York, and that same condo, or what they call apartments, is going to cost $3 million. Same property, same, but then people are like, location, 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 location. Exactly. The stock market's the same thing. It's location, 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 location. AI companies are going to be valued higher than a retail company or a restaurant company because of how America is formed. That's why so many people want to attach certain names to the back of their names so that they can get valued differently. Tesla, for example. People laugh at Tesla because they're like, Tesla, when people are buying Tesla, the funny thing people used to always say is, oh, Tesla's not a car company. It's a tech company. And I'm like, huh? Tesla's not a car company, Joel. It's a tech company. Tesla's not a car company. It's a tech company. They own their own tech. And then I go and I look at Ford and General Motors, and they're like, yeah, we got our own tech too. I'm like, so then y'all should be tech companies too, right? Y'all got your own tech that handles like your vehicles. They're like, yeah, but we're considered car companies because we were around since the 1900s. So we can't get that car thing off of our page. We got to be labeled car companies. Now Tesla's labeled a tech company. It has $1 trillion market cap now. And we sitting down here at 30 billion. It's perception. And it's interesting that it's like that. And it's funny because people say it all the time. Oh, Tesla is not a car company. It's a tech company. And I'm like, I own 2 Teslas, and I'm pretty sure it's a car company. I'm pretty sure what they sell the most of is cars. I know BYD, whatever the heck it is in China, they don't call themselves a tech company. They call themselves a car company. And guess what? They sold more cars, electric cars on the planet than Tesla. And they got the same tech, if not better. But BYD ain't valued at $1 trillion. It just depends on who can flip the verbiage to make Wall Street believe, oh, it can be valued at this price. All right. Oh, no. Tesla's a tech company. It's not a car company, Joel. And I laugh because it's just funny to me. And then I'm like, okay, I own it. So if y'all want to take this car company to $1 trillion in market cap, then so be it. I'm in it. Do it. It don't make any sense to me, but do it. Can it get to $1 trillion? Yeah, because there are other $1 trillion companies. If you look at the top 5 companies in the world, your NVIDIAs, your Apple, your Amazons, your Googles, your Microsofts. At one point, guys, they were only like $200 or $300 billion in difference between each company. Do you actually believe they were all making the same amount of money and they were only $200 and $100 billion in difference? Or is it because we're buying on the investing side that we wanted to make sure that that 1 trillion was a cap? When Apple and Amazon hit those $1 trillion market caps, if you was watching the market at that time, they kept trading positions. Amazon will hit $1 trillion, and then they'll say, all right, the investors will take their money out, roll it into Apple. Then Apple hit $1 trillion. Then Google hit $1 trillion. It was an exciting year because everybody hit $1 trillion at the same time, as if they were all making the same amount of money. It's not. Investors were invested in all of them. $1 trillion was the cap. Once they hit $1 trillion, they sat there for a minute. And then they let another company boom out, get to $1 trillion, and then investors feel comfortable taking it up to $2 trillion. NVIDIA has pushed the envelope and has pushed the price of the market cap of these mega companies to $4 trillion. That allowed every other company for investors to be invested in, to maybe see Google hit it, and then Amazon hit it, and then whatever hit it. But realistic expectations is going to tell you that these companies, on average, are making anywhere between 20 to 30% a year. 20 to 30% a year. 20 to 30% a year. That's realistic. Just because NVIDIA makes the most money on the planet doesn't mean that's the stock that's going to go from $100 to $10,000 a share. You don't make your money from the operations of the company. You make your money on the ballooning of that market cap, period. You guys don't want to hear this, but that is where you make your money. You got to have realistic expectations. So I'm going to look at a couple of you guys' stocks. And it's important when it comes to looking at, using the Millionaire Challenge. So we're going to also talk about a little bit of risk to reward before I look at you guys' stocks. My own personal risk to reward. Risk to reward, guys, is single-handedly the reason why most of you guys have trouble making money in the market. It has nothing to do with your strategy most of the time. I've seen you guys take tens of thousands of dollars worth of classes because you're thinking, I have to get educated. I'm missing out on something. You're not missing out on anything. A stock has a 50% chance of going up or down. Think about that. A stock has a 50% chance to go up or down. You shouldn't have to take a $20,000 class to teach you that. So why am I always losing? Your risk to reward. When I have consultations with people within the first 3 minutes, I'm like, it's just risk to reward. It has nothing to do with your strategy, but psychologically you think it's your strategy. Well, your strategy doesn't have a great risk to reward in place. So let's talk about risk to reward. When I'm buying a stock, when you guys are buying an investment, you're getting into an investment. In the comment section, let's say I put $1,000 into Apple. When it goes down in price to the point where you're like, maybe I'm going to get out of that stock. What is that level for you guys? Is it a value or is it a percentage? Put it in the comment section. What is your risk to reward on your investment? Like if you're in something and you're like, man, I just can't be in this stock no more because I'm losing too much money. What percentage on average are you guys waiting for it to drop? I just want to be, okay, 10%. 10% is kind of tight, Nick. Nick said, hey, look, if you drop 10%, I'm cutting you out. You done. All right, Get Fit said 75. Now, 75 is important because I want you to hold on to that 75. 30% Lester, 30% Raymond, 25%, 20, 30. Guys, those are numbers that most people use as an investment. So when you leave today, what I want you to do is look at some of the stocks that you're in. If they're down more than 30%, if they're down more than 30%, I want you to really think real hard about owning that particular company. All right. Now, we do have to get into beta and all of that, right? We've gone through 100 days. So I'm just assuming that everyone that's here today, we've been educated on the market. We know what market cap is. We know what beta is, right? So when I buy something, guys, 20% is right around the number that I use. So when I'm investing, because we're going to go to trading also, we're going to get into trading and then even options. When I buy something, and my number is I usually invest about 10 grand into something that I want to buy minimum. That's the minimum amount that I'm going to invest in a stock. If that 10 grand at one point is worth 8 grand, I have to get out of that stock, period. Now, I know a lot of you guys are like, but what this news and what if that news and earnings? I don't care. Now, I want you guys to think about this. When I buy a stock, I want you to think hard about what I'm about to say. When I buy a stock, more than likely, I'm already buying it 20% off. Think about that. So if I see Apple at $100, and I see it hit an all-time high of $100, and then all of a sudden the stock price drops to 80, I usually start buying at that level. If I buy Apple at the $80 level, and then it drops 20% from where I get in at, more than likely you have a bearish company. Because I'm not buying it at the highs and it's dropping 20%. I'm buying it when it drops 20% and it drops another 20%. And I'm dollar cost averaging in that bad boy. So there's obviously something wrong with that company. I have realistic expectations. Although I believe in the company, although I want to grow with that company, I have to stick to my guns. Now, I got bit just recently. I just got bit recently by a stop out, and it was AMD. And I tell this story all the time because I usually don't get bit like I did. Now, I just got bit by, what was it? Not Oracle, UNH. United Health just got me. UNH got me twice in the last year. I'm done with UNH. I'm never buying UNH again. But before UNH, AMD got me. And I had been a lover of AMD for years. For years. Some years I'll come in and I'll say AMD is my top stock for the year. If it drops 30 or 40%, I'm buying it. Man, I bought AMD 30-something% off. And then the stock dropped another 30% from there. And the week after I sold, the stock ran up, guys, and then ran another 200% up. So even gurus like myself, it happens to the best of us, right? But I'm not mad well, I am mad, but I'm not, it didn't kill my account. It wasn't like my account wasn't up for the year. It could have been up even bigger. But I've learned that if I stick to my guns and I do this time and time again, every now and then a stock will turn right after you sell it. All right. But what I want you guys to start doing, because it's realistic expectations. If I've been in a stock and it's been a whole year and that stock has not made me 1 cent, you might need to reconsider being in something else. Because more than likely, these are real statistics. These are real statistics. 80% of the time, that stock is supposed to be going up. 80% of the time. 20% of the time, that stock should be going sideways and down. So if you find yourself being in something for over a year and it's going down in price, there's a real high percentage chance that it's going to continue to go down in price, maybe for a couple of more years. So to protect yourself from that, get out, lick your wounds, continue watching that company, and then once you start seeing it rise again, maybe you can jump back in. Or, in my opinion, maybe sell half of those shares. Sell something. Because I want you guys to spend more time in in green companies than red. If I open up your portfolio and more than 50% of your portfolio is red, and it's been red for like 6 months, you need to reevaluate what you're doing. All right. I think 10% of my portfolio is red. 10% at any given time. My portfolio has to stay green. It cannot have any red in it. And that's just my philosophy. And once I adopted that philosophy, I spent more time in things that were going up in price and less time in things that were going down in price. All right. I know some of you guys are great at committing, but committing to a stock for over a year and it hasn't performed for you, you got to start thinking twice about that stock. You got to have some realistic expectations. You got to start implementing that risk to reward. All right. Now, let's say I'm trading. How much are you guys risking on trades? And I'm not talking about options yet. Let's say you're trading Apple. Let's say you got $25,000 in Apple and Apple starts to go down in price and you're intraday trading or swing trading. How much are you guys risking on swing trades? Because in my opinion, you guys are risking too much on your swing trades. Investments, I can see why you risk 20 to 30%. No one should be risking more than 10% on a swing trade. No one. Get fit. I know you're saying $50 to $100, but let's make that a percentage so that everyone can understand. Everybody can be on the same page. All right. Percentages keeps everyone on the same page, whether you're trading $1 million or trading $1,000, whether you're trading $1 million or 1,000, we're all on the same page when we talk in percentages. And I want you guys to think in percentages. Don't think in dollar amounts yet. I get it. Like when I'm going to be honest with you, when I'm trading micro futures, I will risk $100 per contract. If I trade 5 contracts, I'm risking $500. But let's talk about rewards. If I'm risking, let's go back to investments real quick. When you're investing in something, and this is really, 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 really important, guys. When you're risking 20% in a stock, your reward has to be 20% or higher. Now, when I buy a stock, I am trying to make 10 times my money. Y'all hear what I just said? That means if I invest 10,000 in something, I'm expecting that to grow to 100 grand. So let's do my risk. Let's do Joel's risk to reward. I invest 10,000, right? I risk $2,000. Get this, to make $90,000. My risk to reward is so much higher on the reward side. Now, will I take 30% or 40% or 50% or 100? Yes. But even if I'm risking 20% and that stock doubles and I make 100%, that's a 1-to-5 ratio. That's where most investors and traders are. They're risking their reward, the amount of money they want to make, is minimum twice what the risk is. So if I'm risking 10%, I want to make 20% or higher. If I'm risking 20%, I need to be making 40% or higher when I profit. Now, you can keep it 1-to-1. You can if you want to. I know people that risk 5 or 10%, and their reward, guys, their winning percentage is like 20%. And I want to explain to you guys why. Let's say let's do this in dollar amounts, right? Let's say when somebody loses, they lose $100, but when they win $500. I want you to write this down because you're going to be surprised. Let's say when I lose $100, but when I win $500, which is why most investors and traders use the 1-to-3 to 1-to-5 ratio. If I lose on Monday, I lose $100. If I lose on Tuesday, I'm down $200. If I lose on Wednesday, I'm down $300. If I lose on Thursday, I'm down a whopping $400. If I win on Friday, I win $500. 500 won minus 400 loss means I win $100 or profit $100 at the end of the week, and I only won 20% of the time. I didn't even have a strategy that won more than 51% of the time. You hear what I just said? So if I'm risking 20% and I keep taking, and this is what a lot of you guys do, you will risk 20%, but then when the stock is up 10%, you'll take your profit because you're not used to seeing a profit. So you're like, I hardly ever see a profit, Joel, I'm taking it. But think about it. Let's say you risk 20%, but every time you win, you make 10%. This is what a lot of you guys are doing. You're so used to seeing that profit that you'll take 5% on Monday. You'll take 3% on Tuesday. You'll take 7% on Wednesday. You'll take 5% on Thursday. So total, you up 20%. Then on Friday, you lose 20%. And then you're like, I don't understand why I lost all of my money. You lost all of your money because your risk was 20% and you just kept taking 2%, 3%, 5%, 4%. And then you lost all of it. So you are actually winning 80% of the time. And you still ended up losing at the end of the week. Risk to reward. Risk to reward. You don't have to have a winning strategy to win. I don't want you guys to think about winning. When you guys come to me and you're like, man, I won 7 times out of 9. I don't care about that. How much did you profit? How much did you profit versus what you lost? I don't care if you lost every single day I've seen traders lose every day of the week, and then on Friday they hit huge. And you're like, why is this guy always profitable? Because he or she don't like seeing red. Y'all like seeing red. Y'all will sit in a stock until it's 60 or 70% down for 2 or 3 years. Not Joel. You got a year to do your thing. A year or 20% down, whichever one comes first. But when I win, you remember when y'all were looking at my percentages? I want y'all to look at something. This is real. You're never going to be able to get a 3,000% return if you don't let that bad boy run. I never in a million years thought that I would have a 3,000% return in NVIDIA. In fact, I was cool with 1,000. 1,000% is absolutely ridiculous. That's 10 times your money. I done made 34 times my money. Does that even sound real? No. If I'm risking 20% to make 3,000%, y'all know how many times I can be wrong in any other stock? I can be wrong all the way across. I could have been wrong in half of my portfolio. All you need is one company to run. But if you're not diversified, because you don't have realistic expectations, you can't catch an NVIDIA because you got all your money in Ripple or all of your money in Dogecoin or all of your money in Bitcoin. Guess what, guys? I caught Bitcoin. I caught Ripple. I caught Nvidia. I caught every single stock that y'all are out here talking about. There ain't no stock I ain't catch a run in. There ain't no stock. All these popular stocks y'all talk about, the GameStop, the Nvidias, the Silvers. Y'all hearing about it now. I'm catching all of them. All of them. All of them. Because, first of all, I'm not afraid to put any money into it. But then I have realistic expectations. If I got into silver and and I'm in it right now. I'm in it again. If that bad boy drops about 15 or 20%, I'm out. Well, no, I'm going to give it a year. That's realistic expectations. A lot of you guys are like, nah, I'm just going to have diamond hands because I was talking to somebody and they were talking about how it's an industrial metal and, you know, China's buying a whole stockpile of it and Russia hasn't really started buying it yet. That's hoping. You're hoping and praying it goes up. That's that hoping type talk. I see y'all do it all day, every day. You try to explain to me something I already know. I mean, I'm in the same thing you in. You ain't got to explain nothing to me. I'm in Ripple. I'm in Bitcoin. I'm in Solana. I'm in Cardano. Them joints is trash right now. In fact, I just sold my Ripple 2 weeks ago because I kept saying, guys, these charts look bad. I'll get back in once it starts to go up. Well, Joe, why did you sell? Because the charts are going down. I gave it a year to do something. It ain't do it. Bitcoin ain't go up in a year. Ripple ain't go up in a year. Solana ain't go up in a year. So everybody hoping and praying. You're hoping and praying. But what if what? If it starts to go up, I'll buy it. Like, you act like I can't just open up my account and buy it. But it's going to be a higher price than you bought it before. So what? As if one day it's going to be one price and then it's going to be another price the next day. And that's the only time you can get in and out of it. Realistic expectations, guys. Joel's going to be in it if it starts running. If anybody's going to be in it, Joel's going to be in it. You ain't got to worry about Joel. And it might be a higher price. I just bought silver. Well, I bought silver at a lower price now. I bought silver at $30-something and sold it in the 80s and 90s. It's now back in the 70s. I just rebought it in the 70s, which was higher than what I initially got in at in the 30s. You guys, because of ego, care about having the lowest price. I don't. I care about making a profit. You guys are at that point in your lives where you have something to prove to yourselves where I have to get a lower price. Not me. I have enough receipts where I don't ever have to prove nothing to anybody. I care about profits. Is it running up? I don't care if it came from 30 or 20 or 10 or 5. I don't care. I missed out on that. But where can it go? Can silver go to 150 or 200? Great. Is there room for me to make money to 200? Great. Is there room for me to make money in Bitcoin from 100 to $1 million? Yeah, because the market cap realistically can be worth maybe 20 trillion one day. It ain't happening next week. It ain't happening next year. It's not happening maybe in the next 5 years. Sorry to tell you that. Realistic expectations. When Bitcoin starts to grow, guys, it grows about 3 times its value. That's just math. That means if it's 2 trillion, even if Bitcoin does that miraculous run that it does, 3 times, that means it will take you from what, guys? Let's just do math. 2 trillion to 6 trillion. It's just simple math. 2 trillion to 6 trillion. My 100 grand goes to 300 grand. And then it's going to get cut in half. You heard what I just said? Once it hits 300,000 a coin, it's gonna get cut in half. If you know this beforehand, you're not surprised when it happens. Because then it's gonna drop from 300, maybe 330, to 160 or 150. And then it'll probably go on another miraculous run from 150 to 450. And then it's gonna get cut in half. And then it's gonna go from 450 to 225, and it's gonna scare everybody out of it before it goes from 200 to 600. It's not gonna go there in a straight line. And then it's gonna get cut in half from 600 to 300. Then you might see it run. It might sit there for a while. From 300 to a mil is gonna be really, really hard. It just is. It's gonna be psychologically hard for it to actually do it. It's just the psychology of the market, guys. But if you know what it's going to do in advance, you can start positioning yourself now. All right. Let's look at some of these gains I got, right? If I'm risking 20% to make 160% in Walmart, that is a hell of a risk to reward ratio. I'm making 8 times what my risk is. That means I can get into Walmart, guys, and lose 20%. I can try to get into Walmart again the next year, lose 20%. I can wait the 3rd year and say, man, let me see if 3 times a charm, and I can lose 20%. That means I could have lost 60% of my regular investment into Walmart, and then Walmart finally starts to run and it goes to 160. I won 1 time and lost 3 times, but I profited because my risk to reward was in place. Risk to reward is the reason why most of you guys lose money. You guys don't figure that out until late till after $20,000, $30,000, $40,000 you done spent on a class. If you're risking 20 or 30% and you're making these 80% and 70% gains, that's why you see me up here with all this swag. It's funny, but it's not funny. It's funny because you're like, dang, that makes a lot of freaking sense, Joel. When I show you guys my portfolios, I really be showing y'all my portfolio. You're hardly ever going to see anything in my portfolio down 20%. Netflix, 13. It's got about 7% before it gets the boot. %. I'm mad at these companies and they down only 1 or 2%, and I'm hot. I'm trying to kick Microsoft out now. I just bought Salesforce. I'm like, yo, bro, you down 3% after 2 days after I bought you? I'm gonna need you to get it. I'm gonna need you to get it right next week. But when that bad boy starts running, I'm not going to sell it when it's up 6%. I might not sell Salesforce until it's up 100 or 150%. My risk to rewards are, my reward is so much more than my risk. I feel comfortable buying things. But do I lose? Of course. These are losers in my portfolio right now. But they get the boot. The difference between me and you guys is when I lose, I don't take it personally. I don't. I used to hold it because I just couldn't lose. And then I had to go look at my charts. I had to figure. I'm in there on the earnings. I'm in the Reddit rooms reading like, why is my stock going down? Because that's what stocks and assets do. They go down. They go down in price and then they go up, and then they go down in price and they go up. They go up, they come back about half of that before they start to rise again. They got to give you a chance for other people to buy it. Remember, supply and demand. Okay. So 20% is what I use for my investments as trades. You guys shouldn't be risking no more than 10%, in my opinion. All right. Hold up. Let me block some people real quick. All up in this joint. Give me a second. All right. They're not saying anything bad. It's just cats be coming in here trying to school y'all. Listen, another thing, guys, if you are getting messaged by me, it ain't me. There are so many accounts on this platform that are mimicking me. Like, I do not have no new crypto binary option whatever for you guys. I have a hard time checking my messages. So it's not me DMing you. It's somebody else. So any of those accounts that you are getting DM'd, block them, and then let TikTok know that it's an account that's impersonating me. All right. And I will appreciate that. And then you guys won't get disturbed by these cats coming in here trying to do their thing. All right. Now, we talked about trades. So trades, I'm going to risk about 10 or 15%. Now, it also depends on, that's pure stock. I'm talking about pure stock. If I'm buying Apple, I got 10 grand in it or 25 grand in it, and I'm looking for like a 2-week or a 3-week trade, I'm going to risk about 10%. Now, if I'm intraday trading, let's say I'm trading Apple and I'm getting in and out of it the same day. I might not risk. I'm risking about 1 to 3% to make 3% or higher. So if I got 25 grand in Apple, I'm looking to try to make, $750, right? But I'm also going to risk, 1 to 3%, really 1% to make 3% or 3%. Apple doesn't move 10% on a given day. So it just depends on what I'm trading. If we're talking about Apple, I'll probably risk 1%, which is $250 to make $750. All right. Anytime I'm day trading and I'm down $250 trading Apple, I got to get out, re-enter that trade and try to make more. All right. If I was trading the futures market, guys, I'm going to risk on the mini contracts. I'm going to risk $100 to make more than 100. Now, it sucks because I actually am close to 1-to-1 when I'm doing futures trading, which it shouldn't be that way. All right. And I got to get better at that. All right. But I'm going to risk 100, but I have to make $100 or more. But I can see why you guys are doing it, because a lot of us, that's where we're trading the most. Because if you don't notice, in the futures market, you can get in and out of the market a gazillion times, and you don't have to have $25,000 in your account. So a lot of us are taking 5, 10, 15 futures trades on a given day. I would say risk. I'm supposed to maybe risk $50 to make 100, but I get lazy, so I'm risking 100 just like you guys are. If I'm trading the big boy, which is 10 times the size, I'm risking 1,000. All right, but the big boys have gotten so big, I can't even afford the margins no more. The margins are ridiculous. You gotta have like 30 grand or 40 grand a contract. It's wild out there. So they created the micro futures so that you can at least, trade a couple of contracts. I know a lot of you guys are going on NinjaTrader and all of these other particular platforms to get the margin down. I don't believe in that. I like the fact that Thinkorswim has a very high margin for their futures account, because it's going to protect you, in my opinion. You're going to have the capital, and then you have the capital there, because if the contracts are like 2,300 or 2,500, it's going to be real hard to lose all of that. Now, you can in a day. I've done it before. I got on a plane one day and had an account with about 10,000 in it, and I was trading futures. I can't remember what I was trading. I don't know if it was the Dow or the NASDAQ or whatever. That day, the NASDAQ or Dow was down like, it was something stupid, like 6 or 7%. So I was like, just like anybody else, I was using Bollinger Bands at the time, which suck. I got in that trade long because I was like, it's down 6%. It's got to turn back around. I got on a plane with my wife. We got off the plane. I checked my account. My account was at zero. I lost 100% of my money in the futures market that day. Now, I know you guys are like, well, dang, the market was down 6%. I guess it kept going. And the brokers sold that futures contract for me so that I wouldn't go into the negative. And I had to re-up, the next week. So I lost 100% of my money that day in the futures market. So be careful when you're trading the futures market. All right. Never made that mistake ever again. And I don't even think it turned around. It took about 3 or 4 days. Like if I had the capital, it did take about 4 or 5 days for it to turn back around, but I probably would have been even more in the red. That's why it's important, guys, that you have risk to rewards in place. I had to learn the hard way. And I had to tell my wife that I had done that. All right. True story. We bounced back since then. I'm trying to pin your comment. All right. When I'm trading options, what are you guys risking on your options? Let me know in the comment section. What are you guys risking? When you take an options contract, what are you guys risking per option? Honestly. Platinum Plus said too much. I feel you. Too much. 15. Man, I need to trade the way you trade. If you trading options and you're only risking 15%, you are on it, doggone it. It's no way. Every options trade I buy, I'm down 15% at some point. Every options trade I take, 3 minutes later, I'm down at least 20. 15, you guys got some really, really strong risks. I'm surprised and I'm happy for you. But I full transparency, and I'm gonna be totally honest with you guys. I risk 50% per option minimum. But remember, I'm trying to make a gazillion dollars off my options. I'm trying to make like 1,000% return. So I can risk 50% and I can lose a couple of times because the amount of money that I use or that I start off with, the options guys, I have a different mindset when I trade options. When I trade options, I have to have the mindset that if I lose every single dollar, am I going to be okay? If I lose 100%, am I going to be okay? That means if I'm willing to lose 50 to 100%, you can't take 20% profit or 30% or 40%. You gotta sit on that bad boy and hope that it moves. Because if you keep trading that way in the options market, it is single-handedly the reason why most of you guys are not profitable. If you're risking 100%, you can't be satisfied with anything less than 100% return. Period. That's like minimum. If you're risking the whole option, if you're like, Joel, I'm just waiting till the Friday expiration and I'm risking it all. I'm risking it all, son. Then you got to take 100% returns or higher. And if that's not realistic, then you need to reevaluate the way that you're trading those options. I risk 50%, but y'all know what I try to do on a daily basis. I'm trying to hit a home. Not only am I trying to hit a home run, I'm trying to hit a home run over center field out the park. So I'm trying to get it all. I'm trying 200%, 300%. I'm like, all right, I'll take that. I'm trying to get like 500,000% returns. So I can risk 50%. But you guys know how I'm trading. I'm trading only in the options market. Don't get me wrong. Don't think that I don't. Everything else, guys, I'm super conservative on. You hear my numbers. When I'm trading, when I'm investing, 20%. When I'm day trading stock, about 1 to 3%. When I trade my futures contracts, I'm risking about $100 per contract. But when I trade them options, 50% minimum. I gotta see if that thing can move. And if you've been trading the way that I've traded, I've shown you guys the $1 million trade every day for like 100 days, except for the day, of course. And even on those trades, it might only go down 30%, maybe 40%, before it rips up in price 200 or 300%. So if you haven't seen that Millionaire Challenge trade, you guys need to come in my lives at 6 o'clock. I'll try to show you guys one before I leave today. What time is it? 7:46. I'll show you guys the Millionaire Challenge trade of Friday, which was what? Silver put. Yeah, because silver was down 35% on Friday. You could have come into the market, traded silver on Friday, 15 minutes after the market opened, and still got you about a 200 or 300% return. You don't have to only make money holding things overnight. Now, I did forget to put out my disclaimer. So anything that we talked about today, guys, are the opinions of Joel. Look, guys, I don't get offended when we don't see eye to eye. I hope you don't get offended either. All right. I'm just blatantly honest in the way that I see the market. It doesn't mean that I think that you're not as smart as I am. It doesn't mean that I think I'm more intelligent. We're all going to see things differently. I don't know what you're doing. I don't know what your portfolio is, right? Now, if you talking crap and your portfolio is red all the goddamn time, then you might need to do a little checkup. But if you profiting and you can show receipts and you can back up your strategies, then by all means do it. I tell people to do it all the time. We all want to see things that work. I'm just telling you guys what's been working in my life, and I've been super consistent in these numbers for over a decade. You can go back and watch videos I've done on YT. You're going to hear me talking about the same numbers before COVID. All right. You can't get percentages like this just being in the market the last year or two. All right. All right, so I show these receipts because I want to be able to stand out from all of the other 90,000 other educators that are on this platform that refuse to show you guys receipts because more than likely they're not buying or trading the market or profitable. But they do have some nice looking classes. And they do charge a lot of money for them. But ask them, why do you refuse to show us what you've done? Why is it a secret? Why is it? Why should I believe in what you're doing? I come from a time where you had to prove yourself. You don't get a title. You don't get anointed anything until you've done something. Something like anything. Like, can you show me something that you bought? You ain't buy nothing in the last 15 years? And you offended because I'm asking you? Probably because you ain't buy nothing. All right. So let me show you guys the Millionaire Challenge trade. And then I'll try to look at some of you guys' stocks. Today was really important because risk to reward is more, in my opinion, it's the most important thing when it comes to looking at these particular stocks. Now, if you don't know this, we've been going through different platforms. So if you ever want to follow along what we're doing, if you never heard of Market Cap, you could download this platform right here called Yahoo Finance. This is what I teach my fifth graders. I tell them to pull this up, and in 1 minute, In 1 minute, they have to tell me the market cap of that company, the stock price, the 52-week highs and lows. They have to tell me the beta of that company. And they have to tell me how much was that company up or down in the last year and what percentage. Now, a lot of you guys are like, that's a lot of information. They're giving me this information in 15 to 20 seconds. So you should be able to do it. If a fifth grader can do it, you should be able to do it. A lot of us just didn't know what that meant. All right. And I got that. I call it Mission Impossible. Thank you for the hat. And in that Mission Impossible, it allows you to become the best stock market master in your family. I've taken a lot of you guys from never even looking at a stock before or understanding what a stock is to being the stock market master in your family just by knowing what market cap is or beta. Beta is how much horsepower it has. Market cap is how big it is. 52-week highs and lows lets you know if you're buying it at the highs or buying it at the lows. It also is letting you know what percentage to buy it from the highs. If I see a high beta company, 1.5, 2.5, I'm like, oh, I ain't buying this stock unless it's 50% off, period. Because of how high the beta is. You guys are coming in here like, it's not going to drop 50% because this is happening and that's happening and they got this coming out. And I'm like, all right. And then when it drops 50%, you're crying and you don't understand why. It's just math, guys. High beta companies drop 50% every year. Get over it. They just do. Everybody should have known silver was going to drop the way it did on Friday. I've been telling you guys for the last week or two, and I owned it. I owned it and told y'all, guys, don't drop 40 or 50%. Every single day, it was somebody in the comment section arguing with me about silver. Like, get out of here. Like, let the OG speak. And sit in that corner and learn. All right? There's something that I do this for a living. All right. So Yahoo Finance is where you can go to download and look at a company and look at it. And the platform that I'm about to show you guys, and I'm going to go about 15 minutes over. Normally I would stop at 8. I'm going to go to about 8:15 because I want to look at some of you guys' stocks. All right. Because I've been running my mouth the whole time. Charles Schwab. I'm going to show the Millionaire Challenge trade. Charles Schwab is what I use. I'm going to show you guys a platform that's going to have some of the most beautiful charts you've ever seen. All right. The brokerage that I'm using is Charles Schwab. The reason why I believe that it's the best platform out there is because of all these different things that Charles Schwab has to offer with this Thinkorswim platform. Like you can do futures, options, Forex. You got heat maps on there, scanners, and guys, you have a paper money account. The paper money account allows you to trade fake money. I say fake money, but you can trade virtual money in real time. So you can practice on your strategy if it's real time. I think if you have money on that invested on that account, it might be 15 or 20 minutes delay, but it's still the market. So you can see how it looks. You can say, hey, if I had this amount of money and I bought this, you can even wait a whole year and see what happens in that account. I know people that work on their strategies for a whole year before they decide to put it to work. They may know that in about a year they're going to retire. So they're practicing their day trading strategy. All right. And if you want your charts to look like mine, you can always go to my profile. When you go to my profile, there's a link in there. When you click on that link, my most profitable video is going to be that Thinkorswim chart setup video. Now, you ain't got to buy it. I just know me. And if I was to use a platform for the first time and I know somebody was going to go through step by step for 2.5 hours and walk me through how to set up everything so it looks like his charts, I'm going to buy that video. I'm not going to try to do it on my own. All right. And it's not $1,000 for the video. All right. So this is the S&P 500. We talked about this last week. If you had invested your full 401k and you maxed it out for over 16 years, you would have been up about $1 million. It took about 16 years to do it. But I know a lot of you guys want to look at the Millionaire Challenge trade. So we'll look at the SPY in a second, but let's just look at silver. And sorry for those that already know what we're about to do, but silver, let me delete that. Silver, if you were looking at a 5-minute chart, if you were trading the way that I was trading, and I help you guys set up this chart, minus one of these indicators, this red and green cloud, that's not in the video yet because I haven't introduced that to anybody. But I want you guys to let me know, what do you guys see? What color do you guys see right here? At 9:30 this morning, 9:30 on Friday morning, silver was down about 20%. What color do you guys see? I mean, I know you guys see this. What color do you see? Is it green or red? What color do you guys see? It's red, right? It's red as red can be. Most of you guys are like, oh my God, I didn't know what direction to go in. Silver was getting obliterated. There was only one direction. Fundamentally, it was getting smashed, and it was about time. Now, where a lot of you day traders go wrong is you wake up with your own bias. You study all night, you wake up, and then you say, I'm going to go long silver because look at what it's done over the last week or two, right? A lot of you guys trade that way. And if it's working for you, continue to do it. I don't do that. I wake up every day as a day trader and I let the market tell me what to do. Like it's God. God comes down and it says, Joel, my son, you are a 1%er. I don't want you to trade like everyone else. The market is red today. I need you to go down with the market. And then I say, all right, God, can you tell me where to go to? Because I used to try to pick God. I can't really tell the way these charts be working these days. Can you tell me how I know where to go? Well, Joel, son, what I'm going to do for you is I'm going to show you the volume that's being bought. And it's up to you to use those eyes to see where everyone else is buying. So I say, great, God. Let me go see where that's a good idea. Like, don't trust myself. Let me trust what the market is doing, because the market's bigger than me. I've been thinking this whole time I'm smarter than the market. God's like, oh, everyone does, son. So I go into the silver market and I see what was dang, it's not here anymore. So we're going to go to next week. Let's say, what's next Friday? February the 6th. All right. I knew I should have saved it. I didn't say, oh, this is Q's up here. That's not it. Here we go. So silver, still not there. Hold on. Give me a second, guys. I don't know why it's acting up. Silver. And I want you guys to see this because you can't see this from your phone. So I'm going to take a picture of it. I learned this trick from the Nigerian brothers that used to be on Thinkorswim. I mean, they used to be on TV. And when they were on TV, they used to teach me about unusual options activity. Unusual options activity is areas in the market where the big boys and the whales would buy the market. And they said, never choose your own strikes. Just look and see what all the whales are buying. And I was like, oh my God, that makes so much sense. There's only a couple of platforms that's going to allow you to see the volume. So with your own eyes, I'm not going to pick it. I want you guys to tell me what you guys see. Now, first of all, you're going to be captivated on how much money people were making in 24 hours. Now, in 24 hours time, these are real numbers, and I don't want you to fall out of your chair. But this is how much people were making in 24 hours off of that silver drop. Those are real numbers. Can somebody in the comment section tell me the largest number they see, percent-wise? Because I don't believe this with my own. I swear I got lion eyes right now. What is the largest number that you see? This is what Cats was making in 24 hours. They weren't making $15,000, guys. They was making 15,000% in 24 hours. What? Joe, these numbers can't be real. It can't be people out here actually making this in 24 hours. And I'm like, yeah, I'm teaching this on Monday. Now that you've fallen out of your chair, we're going to look at another number. We're going to look at, oh, dang, I didn't do it right. Oh, here we go. All right, I want you guys to look underneath my chin. And I want you guys to tell me what is the largest number you see in volume. What is the largest number that you see? Because this is what, not percentage, what's the volume? These are contracts being bought. 23. Yeah, you see some 16, some 23. 23 is the largest. Oh, I see the 23 is up in the boonies where you can't really see it. My bad. 23 to 21. Well, now I know what strike to buy. All right. So watch this. Watch what I do. Now, it's not going to be that number early that morning. All right. So anyone that thought that it was going to be that much at 9:30, it wasn't. But it was probably 4 to 5 times larger than any other strike. So it's going to stick out like a sore thumb. We call that unusual options activity. Now, this isn't something that I'm teaching. I learned this from the Nigerian brothers that used to be on CNBC, and they actually had a portion of the Fast Money show where they called it unusual options activity. And they did that for about 2 years. For 2 years, and then all of a sudden they left, they opened up their own business, and they never did unusual options activity on the show again. But I was watching at that particular time. They even had a show that came on afterwards that was called Options Actions. It didn't take off. And I was like, why is it not taking off? Like, do cats know that this type of money is being made on a daily, not on a daily basis, because it's not often that silver is going to supersede the NASDAQ in contracts in a day, or the Qs in one day. So this is an anomaly, guys. I'm just showing you guys an anomaly. The 15,000% return. None of us are probably ever going to get that in a 24-hour period. But it doesn't mean that I can't make money today. Doesn't mean that I can't make money today. I'm going to roll in. God told me, don't. Joel, you gonna stop picking the direction and the bias. I'm gonna tell you what direction everything is going. You wake up, charts are going down. You see everybody buying puts, and then you're seeing the strike price that everybody is buying. So then, I don't know if I'm gonna be able to pull it up, but we'll see. We pull up that strike, and we're gonna send that strike to... We're going to look at the actual strike for that company. Now, right around 9:45, the market dropped and it didn't turn around until about 1 o'clock. Now, if you bought that particular strike, we're looking right now, guys, at the strike that had the most volume. You're looking at a real chart right now with the real strike. Now, you guys are going to fall out your seats because at 9:45, I don't even believe that number. I'm just going to go to a different number. We're just going to say $30, right? That was the 9:30. Let's just say at 9:45, this option was about, this is a whole number, was about $20. I think most of us in here have $20. We all got $20 to, I've seen y'all go to the gas station and buy $20 worth of lottery tickets, right? That $20, guys, by 12 o'clock, was worth, almost did it. Oh, no, it didn't. It did it. Was worth $100. Hold on. That $20 by 12 o'clock was worth $100, but by dang 1:45, guys, was worth, you ain't even gonna believe this, was worth $800. 800. And you got into this trade late. You were like, you walked in 9:45. Y'all know what kind of percent return that is during the day? You could have got in somewhere around 9:45. That's a 3,000% return right there. 3,000. And you got in late. You got in late. You didn't get in the day before. You didn't get in at 9:30. You got in at like 10 o'clock. And you could have turned a 3,000% return just by seeing if anybody else is buying them options. Because see, what a lot of you guys do is you'll try to buy out of the money. But you'll just buy out of the money because of your support and resistance and pivot points and Bollinger Bands and Keltners and Elliott Waves and MACDs and stochastics. Y'all get in because of that stuff, right? Not because the whales are buying at certain strikes. And most of them probably all know what strikes they're buying at, right? There's a lot of volume there. Over 20,000 contracts being bought. And you could have taken a shot with $20. I think a lot of us can take that as a risk. It's important because, guys, how many of you guys would risk $20 to make 40? Who would risk $20 to make 20? Right? I'm every single day taking a trade like this. And I'm not even satisfied unless it's 100% or more. And I'm risking 50. So I'm letting you know what I'm doing. I'm not saying that your performance is going to be the same as mine. Remember, this is a opinionated room, do it yourself room. I'm just showing you guys the strategies that I'm using for free. All right. Now on Monday, I'm going to, for you guys that never bought an option, don't know what it is, I got to teach it to you because a bunch of you guys are going to run and try to open up a Robinhood account right now and try to trade options with no education. I'm talking about volume and strikes and y'all just in there buying it just because of the percent you saw. I spend that much on a daily basis. Joel, I throw galaxies that amount. All right. You still want to develop your own strategy, but I'm showing you guys what I'm freaking doing. Now, most of the time I show this trade this is not financial advice, but I'm showing you guys what I'm doing. Normally, I show you guys these trades in the SPY, in the Qs. I'm only showing you guys in silver because nobody on TikTok showed this. I went into everybody's TikTok room that trades. Ain't a single individual show anybody the options and the puts that were being made in silver. I was like, who is in here trading? That was like the trade of the century. But I keep forgetting I'm a 1%er. Joe, you can't expect 99 other people to see what you see. I got unrealistic expectations. All right, guys. So, you don't think it's done, Broadway? I don't need a Broadway. In fact, you know what I did? Broadway. I bought silver on Friday. Now, if you were a super fan, and the super fans that are in the room will tell you, I came in the room when silver hit 69.9, and I said, guys, I'm buying silver right now. And from the time that I posted it, silver ran from 69.9 all the way to 78 at one point, and then pulled back to about 76. So if you were in that room, a bunch of people in the room have silver right now with their cost bases around 71 or 72, just being a part of my super fan community. There's only a couple of us that are in there. I think it's only like 40 of us that are in there right now, only because a lot of people don't know. Now, I have over 100 super fans. I might be wrong, close to it. But only 40 are in the group. So if you are a super fan, guys, become part of the group. If you don't know where the group is, just pull down, go to the bottom of my page, swipe it across. There's going to be something that says groups. If you are a super fan, you automatically have an entry into that group. Talk about what you buying. Talk about what you selling. All right, we're in there to talk about the good and the bad. If guys, when I was losing on UNH, I was cursing. I was like, I am out of this M and F in stock today. We laughed about it. Some people cried about it. And then the very next day, we're joyous about silver. So, that's how the stock market is. It's emotional. It's real. And I want people that are real, that are actually buying and selling, to be part of that group so that we can have like-minded individuals in the room. So before I get out of here, guys, I guess I'm not going to look at any stocks because I've been running my mouth today. I want to give a shout out to the top 10 in here. I can't pronounce your name. Agyewa? Agyeyiwaa. That's my top supporter of the day. We got Joe Butler, Tim Puri, Safari Dime, Mrs. Crystal, James, Dr. Harrison, Kale, and Lisa Sutton. Sorry about that. Honorable mention, Nick J. Dub and Ann Barrera. Thank you guys for the support in the room. If you guys could help me with my daily goal, what I usually do in these rooms at the end of the sessions is I play music, and when I play that song, engage with like-minded, go through the comments. You might want to buddy up with somebody that has a little bit of knowledge of the market, right? And that's what I want you guys to do. Buddy up with each other. We're all about making money in here. All right, I'm gonna be the leader because I'm here speaking. I don't mind you guys challenging me on anything in the comment section. I don't want you to ever feel like I have to go along with what Joel's talking about. I don't want you to go along with me, but you better back up what you're saying with statistics. That's all I ask. All right. Put those statistics in there. Tell us where to go, where we can go to ChatGPT. We can get that information because it's all about profiting in this room. I'm not right all the time. All right. And even when I'm trading and investing, I'm only winning 80% of the time. Anyone that says that they win in 100% of the time, turn around and run. The only 100% trade that I've ever seen is when that volatility index pops above 50. And people that's been following, you know what to do when that happens. That's the only 100% trade that I've seen ever. And I've been in this game for over a decade. So I'm coming to you guys from Decatur, where it's greater. We gonna stick to the Justin Timberlake theme. Engage with each other, and I'm out of here, guys.